Good morning, traders, and welcome to BCR's morning market outlook. First up, let's have a look at the US dollar. The DXY has traded around 101.5, which is its highest level in more than a year, as markets continue to price in the possibility of further Federal Reserve tightening. Investors are increasingly expecting a September rate hike, while Fed Chair Kevin Warsh has reinforced that the central bank's commitment to restoring price stability. Market attention now turns to the upcoming PC inflation report for further clues on the Fed's policy path. From a technical perspective, the bullish structure remains firmly intact after the index broke out of its long-term consolidation range. Immediate resistance is seen around 101.8, followed by 102.14. On the downside, support is seen around the psychological level of 101, followed by 100.76, which is this week's low. Next up, let's have a look at crude oil. WTI fell below $70 per barrel, reaching its lowest level since late February. As progress in the US-Iran peace negotiations and increased tanker traffic through the Strait of Hormuz eased supply concerns. Improved energy flows have helped unwind much of the geopolitical risk premium that previously supported oil prices. Technically, WTI remains trapped in a descending channel and continues to trade below the key support levels around $70 and $72. The broader trend remains quite bearish, with the moving average structure still pointing downwards. A decisive break below $70 could expose further downside towards $68 and potentially even $65. On the upside, resistance is located around $72, followed by 72.19, while a move back above the 200-day moving average near 72.99 would be needed to ease downside pressure. All right, next up, let's have a look at gold, our favorite, which has fallen below $4,000 and moved towards a 7-month low as expectations for further Fed tightening outweighed support from easing geopolitical tensions. Reduced inflation concerns following progress in US-Iran talks, combined with liquidation from investors responding to losses in technology stocks, added some further pressure to the precious metal. From a technical standpoint, gold remains in a clear downtrend while trading below the 9-day moving average at 42.06. Key support is seen around the psychological level of $4,000 and then 39.60. A break lower could expose the psychological level of $3,900. On the upside, resistance is seen at the 5-day moving average near 41.47, followed by the $4,200 level. Momentum indicators remain quite bearish, suggesting selling pressure has not yet fully exhausted itself. Lastly, let's have a look at the local currency, the Australian dollar, which has held near 69 cents, close to an 11-week low after mixed inflation data failed to significantly alter expectations for the RBA. While headline inflation eased, core inflation accelerated, leaving markets divided on the likelihood of another rate hike later this year. Risk aversion following a technology-led sell-off in global equities also has weighed on the Australian dollar. Technically, the Australian dollar remains under bearish pressure as it trades below both the 20 and the 100-day moving averages. The RSI has slipped towards oversold territory near 28, highlighting strengthening downside momentum. Initial resistance is seen around 69.70, followed by the psychological level of 70 cents, and the 20-day moving average tiny bit above the 70-cent level at 7058. On the downside, support rests at the 200-day moving average, which is at 68.56, with a break below exposing the psychological level of 68 cents.